Good afternoon. As you guys know, I'm waiting for people to join. So what I'm going to do basically is my introduction, and that is welcome to Wall Street Wednesday. Today is, today is what? Today is April 14th. This is episode number 44. I'm welcoming you guys. I expect a lot of people today. We got one big thing to talk about, and that's Coinbase. And I'm going to talk about Coinbase and go into a little bit. So I want to welcome all you guys. Welcome, Gene. Welcome. Hi. Welcome, Richard. I see your name, so I'm just saying welcome. I appreciate you guys coming to listen to me talk. Let me throw in my disclaimer right now, which you guys know I'm going to throw in my disclaimer, and that is, these are my opinions, my thoughts. So take them, that in a grain of salt. But the deal is that if you decide to do anything based upon what I'm saying, please speak to your financial advisor, especially for those who are beginners. What's up, hi? Especially for those beginners that might not understand some of the things I'm talking about or some of the things I'm going to say. So just, again, that's what I want to do. I'm going to give a couple more minutes before I jump into Coinbase. But before I do, guys, we're in earnings season. So for those who don't know, in just a brief history, there are four major corporate events that all publicly traded corporations have to do. And those four major events are, they have to announce their revenue and earnings. They have to announce their financials and release them to the public. Now, a lot of the beginners who trade earnings might not understand this, but believe it or not, you're using earnings as a catalyst. I always talk to you guys about finding a catalyst that's going to drive stock price. What's driving it? Well, earnings is a catalyst. So we're in earnings season. I do expect earnings to be okay. I'm not sure what to expect, actually. I take that back. I do know this. I know most of you heard Jerry Powell talk, and Jerry Powell, who's the Fed chair, Jerry Powell said that he's looking for 6% growth in 2021 and then drop down to 3%. He thinks that the economy is going to, turn around, do extremely well. The pandemic, he basically looks as moving behind us, and that's what he sees. Now, for those of you who don't know, especially those who are younger, the Fed normally would never, ever, ever tell you what they're thinking about and what they see in the economy and the market. They would never tell you what they were going to do about interest rates. We literally had to sit there and try and guess and see what they're saying. So when the Fed chair comes out and tells you this is what they're striving for, again, you can listen to other people and you can listen to the pundits about this one and that one speak. You can listen to people like me speak. But the bottom line is, if that's what Jerry Powell, who's the Fed chairman, is saying that's what they're looking for, then you know that's what they're going to try and achieve. So they're going to do whatever it takes to manipulate the market, manipulate interest rates in the bond market to move the economy in the direction and at the rate that they want to move it at. So with all that said, if you're not bullish, I would say get bullish. Jerry Powell has basically told you to get bullish. All right, he's bullish. He's bullish on the economy. He's bullish on the country. All right, so we got that, Jerry Powell. All right. Now, I'm going to start talking about Coinbase. I know you guys are looking at it. You're interested in it. As I talk about Coinbase, let me say a couple things to you. One, for the last 2 weeks now, I've been studying cryptocurrency. As you guys know, I never want to talk about anything that I'm not familiar with, that I don't have any interest in. So I am actually been studying the cryptocurrencies. All right, there's a number of different websites, believe it or not, that you can go to that have some amazing information. So I'll talk, I'll provide that to you guys. But I've been studying the cryptos. I think we'll all agree on a couple things. One, the cryptocurrencies are here to stay. All right, so let me say it again. I think we'll agree. Cryptocurrencies are here to stay. First thing. Second thing we'll agree on, I think you'll agree, that we're in the early stages of growth of the cryptocurrencies. So in other words, I think that you're looking at a small fraction of where the cryptocurrencies are going to be. Now, notice I didn't say which cryptocurrency. I'm talking about the cryptocurrency market. So I believe that over the next 10 years, the cryptocurrency market will be one of the largest asset-based markets. I think it's going to compete with gold, be bigger than gold. I think it's going to be as big as the currency market. All right, so that's where I think we're headed. So now, which cryptocurrency? I can't tell you that. Now this brings me back to Coinbase. Before I get into the numbers and start pulling it apart and kind of tell you what I saw and what I looked at and what I saw, I'm going to give you an example. a few years back, 2, 3, 4 years back, some of my students and I were in class, and we talked about how the internet, streaming TV, smartphones, but streaming, how this was the thing of the future, and how that everyone was cutting the cable, and that they were cutting the cable and they were moving towards basically streaming. Now, some of those students actually might even be on this call. All right, so when we talked about that, the thing we said to ourselves is, okay, we all agree that everyone's cutting cables, and people were like, are they gonna buy a Fire Stick? Are they gonna go with Google? What are they gonna do? And the one thing that we all agreed upon was the only one pure play in the market. What I mean by pure play, their only business was providing streaming services. They didn't do anything else. And I said to the students, I said, look, I said, this is their core business. I said, so as streaming goes, they're gonna go with it. Roku, R-O-K-U. And the stock has basically, when me and the students talked about it, it was basically a $20, $30 stock. And I think now, I'm gonna pull it up real quick. Symbol's R-O-K-U for those who don't know. And right now, Roku closed today at 374 off of a high of 397 a couple of weeks ago. All right, that's what we're looking at. I shouldn't say a couple of weeks ago. I mean, talking about today. Let me hold on a second. I'm looking at a daily chart. I need to let me give me 1 second. Switch to a weekly chart. And of course, I'm sorry. The near-term high is 480 bucks. I believe Coinbase is the same thing. When I started talking about cryptocurrencies, I talked to you guys, I said cryptocurrencies, I think the money's gonna be made in blockchain. Well, here's the other thing. If you wanna trade the cryptos, most likely the place you're gonna go to is Coinbase, all right? They're the #1 platform. They made it easy for people to actually buy and trade the cryptos. So first and foremost, if you want, now don't get me wrong, as you guys know, you can open an account at TD Ameritrade, Robinhood, Charles Schwab, PayPal, and trade cryptos. But the one place that is doing the majority of the business and their only businesses is the cryptos is Coinbase. There's no question that, which they state in their prospectus, as the crypto economy grows, which we all agree it's going to grow, the cryptocurrencies are going to go right along with it. Richard, I'm not getting into which currency, cryptos. I'll let you guys tell me which cryptos and which blockchain. I'm talking about the actual platform. So when I look at this, the thing I'm going to say to you guys is this. Picture being able to actually invest in the New York Stock Exchange or NASDAQ as the stock market started to grow. And as you know, as the stock market, the markets itself, the investors, the market itself started to grow, you know what happened to the New York Stock Exchange. The New York Stock Exchange exploded. Before they actually took the company public, or took, the seats, back in the late 80s when I was in New York on the floor of the New York Stock Exchange, a seat was going for a couple of $1 million, all right? It was a major investment. I look at Coinbase the exact same way. Now, with all that said, would I buy Coinbase right now? And the answer that you guys know I'm going to come up with is, the answer is nope. I'm not going to buy it right now. I'll tell you a couple of reasons why. And I'm going to put the chart. Let me pull up the chart as I explain to you what I see. Bear with me a second. All right. So what do I see in Coinbase? Some really good things in the company. One, their revenue is increased 2.5-fold from 2019 to 2020. And again, I don't have the final prospectus. I'm looking at the S1 that was issued end of March. When I get to the final prospectus, I'll go through it. I actually had some pictures. I have some pictures of it, but the bottom line is I couldn't shrink them up enough to put them on the phone, so you wouldn't be able to read it anyway, so I didn't bother putting them up. But revenues increased 2.5-fold, all right? Operating income, off the statement of cash flow, $3 billion from operations they generated. And it's an IPO that actually is making money, all right? They have a positive cash flow. They have positive earnings. They're actually making money. The challenge for me right now is, and understand what's going on, it's way overvalued. But that's not why I'm not buying it, all right? There's a lot of companies that are overvalued right now. It's overvalued, but that's not why I'm buying it. The reason why I'm not buying it right now is there is so much hype in this offering. So much. Stock was priced at 250, opened up today, ran as high as 429, and closed at 328. That's the volatility and the volume's there. What's going on is the people that got the IPO stock, they basically are trying to flip it. You got investors who brought the stock on the opening. The stock opened up at 380, 381. What that means is that they had to move the price up to find sellers to actually attract because they had that type of buying. And the stock opened up late in the day. So what I'm saying to you guys is, if you're a long-term holder, and I really mean this long-term, which means that you have the ability to buy this, put it in the drawer, and not watch the stock. If it goes down from 328 down to 250 where it was priced at, you're still going to hold it. If you're that kind of person that's willing to hold the stock for the next 5 to 6 years, boom, buy it now. I'm willing to hold it, but I'm not going to buy it now. As you guys know, I'm going to wait, and I'm telling you why. I'm going to wait for the fast money to come out. I'm going to wait for this stock to pull back. I'm going to wait for the profit taking to come into it. I'm going to wait for these people that actually brought the stock at, let's say, 400, 380, 400, wherever they brought it up there when it IPO'd. I'm waiting for those investors to finally say, I had enough when it starts to run back up again and sell it. So technically what I'm telling you is Professor Milligan will be a buyer of Coinbase when it goes through 429. That's my target right now. Now, I don't think it's going to do it tomorrow, so I'll give it, so let me caveat that a little bit. I expect it to trade sideways or even a little lower tomorrow. I don't expect it to take out that 429 tomorrow. If it takes out that 429 tomorrow, I'm still not going to buy it. I'll let it set a new high, which it could take 2 or 3 days, and then I'll wait for the pullback. All right? Again, it's a strategy I've used for the last 20 years. It's a strategy that's worked really well for me. And one of the things that's going on right now is the hype has driven the stock. I'm not saying it's not going to live up to the hype. All I'm saying is that this train is way down the track. All right? Now, I did highlight some things in the prospectus I think I should read to you. And I think they're important. So bear with me a second. I'm pulling up the prospectus. Well, actually, I'm pulling up the things I took. And I'm going to show you a couple of things. One of the major things I'm looking for now is I'm going to tell you is, cancel that. And I'm going to tell you guys is that they have some really, really interesting private equity investors in here. Tiger Group is one that comes to mind. I'm looking at it now. Anderson Horowitz is another one. Paradigm, Union Square. So what's interesting is they have not sold any stock. These private equity, these venture capitalists that got involved in the stock in the company at the early stages, they have not sold any stock. Key. All right. Why is that key? They are insiders. They know more about the company than anybody else in this room. They know more about this company than anybody you can talk to. They might not disclose everything they know, but they know more about the company than anybody, and they chose not to sell their stock. What does that mean? 2 things. 1, they think the stock's going to go the stock price is going to go significantly higher from where it is now. And 2, you know there's going to be a seasoned offering probably in 3 to 6 months, 7 months. The stock probably should be high. If not, that's okay, but would be higher than where it is now. And that's when you see them start to cash out a little bit. And just because they're cashing out, the other thing too is that the founder, Brian Armstrong, and a couple other key officers also have a Class B stock. Class A stock has voting rights of 1 share, 1 vote. The Class B stock has voting rights of 1 share, 20 votes. So they're going to control the company. Now, I got some other information here I want to bring up for you, which I already mentioned, and I'm going to it. Let's see, revenue, 2019, $428 million. Revenue 2020, $1.1 billion. All right. Operating income, earnings per share, positive, $1.58. That's why I say it's way overvalued. $1.58 fully diluted. I'm sorry, $1.76 basic, $1.57 fully diluted. What else am I telling you here? Operating income off the statement of cash flow. Operating, let me actually stay right. Net cash provided from operating activities, $3 billion. All right. This company's making money. Now, I'm looking for the other one. Bear with me a second. I want to read something to you. Growth strategy. This is their growth strategy. Coinbase growth strategy. Coinbase growth as the crypto economy grows. They're coming right out and saying it. They're the number one platform in the industry to actually trade cryptos. And they're telling you right now that their growth is basically tied to the growth of the cryptos. So my comment to you, for those of you who want to play the cryptos and not take on the volatility of the cryptos and not sure how to trade the cryptos, it's real easy. Buy the platform that the cryptos trade on. All right? Real simple, guys. As more and more people start to buy and trade the cryptos, more and more people are going to go to Coinbase to do it. As they go to Coinbase to do it, Coinbase, 96% of their revenue comes from the fees they charge for you to trade cryptos. Real simple. I'm not trying to make it hard. Now, something else I want to give you here. I'm not going to read that to you, but I am going to read, let's see what this one is. Where's the one I'm looking for? All right. The cryptos themselves, make sure you understand this. The cryptos themselves, between 2012 and 2020, the cryptos, the industry, the crypto economy has a compounded annual growth rate, a CAGR of 150%. Let me make sure you understand what I just said. The cryptocurrencies, the currencies themselves, the whole market is growing at 150% per year for the last 8 years. All right? Again, guys, I can't tell you which crypto to buy. I can't tell you which one to trade. I wouldn't tell you that. And by the way, as I told you earlier, I'm studying, I'm reading, I'm doing everything I can to learn more about the cryptos. I'm in the process now of trying to bring on to the call or introduce you guys to a crypto trader who's been putting up phenomenal numbers. But the bottom line is this. If you're not sure how to trade the cryptos, trade the platform that they're trading on. And they charge a commission. So as more and more activity goes on to the cryptos, more and more coins come out. Don't get me wrong, Coinbase is going to have competition. In fact, let me tell you real quick. Right now, Coinbase's major competition, I'm looking at it right now. So they put down their major competition, Square, Robinhood, and PayPal. That's what they feel like their major competition is on the retail side for individuals. There is no real major competition on the institutional side. All right, I know I said a lot, I'm talking a lot, I'm excited. Would you say, so I'm reading a question here, would you say too fast, too soon, therefore wait would be the best in your opinion? That's a great way of phrasing what I was saying there, Summer. So the bottom line is I do believe that, and again, I know I'm redundant, but I'm a little excited here because I know you guys want to hear this. I'm going to say it again. If you're a long-term holder, which means that you can buy a stock, throw it in your desk drawer, and never look at it again, go ahead and buy Coinbase now. The analogy I'm going to give you is whether you pay $328 where it's at, or $400 where it was, or $250, if you believe that a year to 2 years from now, you're looking at $1,000 or $2,000 stock, it's not going to make much difference in your pocket. So if you're willing to hold the stock long-term, go ahead and buy it. All right, just buy it. Buy whatever you can afford to buy and hold. Throw it in the drawer and forget about it. All right. If you're a trader, now I'm a trader by nature, but I'm going to buy this. I'm going to buy Coinbase based on my trading ability, but I plan on holding it long term. So what do I mean by that? I truly believe, and I've seen this before, that Coinbase could go sideways and even trade lower for several weeks. And the reason why I say that is because so many people have bid the stock price up. At some point, though, when it does take out that old high is when I'm going to buy it. Now, Richard, you asked me how will exchanges that don't charge fees affect Coinbase in the future? Richard, competition's coming. No question about it. Competition is coming. The analogy I would give you is this. AOL, when the internet first came out, AOL was the king. AOL dominated that market. AOL was, if you had an internet account it was pretty much AOL. Now, AOL stock did extremely well for an extended period of time, but as competition came in and better products came in, and they refined it, yeah, AOL ended up not being the place to be long term, but again, it made money. So what I'm saying to you is this: Coinbase has a lead on everybody. They are the market leader. They are the only pure play in the market. No question competition's coming. Can they stay ahead of competition? Well, right now, they have more products to offer, more coins to offer. So right now, it seems like this is the place to go if you really want to be active in that marketplace. So I guess the thing I'm saying to Richard is, I'm not sure. I'm not sure how far in the future that's going to have an effect on it. So it could be a while. I think it's going to be a while before you see some real competition come in. Another way of looking at this is look at Tesla. We all knew that competition would be there. So what happened was, if you think about it this way, Tesla helped define the electric car market. They helped define that market. And I think the number is globally, 1 out of 4 electric cars sold right now is a Tesla. But you know also competition has come in. Competition came in and it's coming. And to the fact that all automobile manufacturers now around the world are coming up with an electric car. So competition is coming, but I think the people that own Tesla stock for the last couple of years will tell you, that's great, let it come. But right now, we're still making money. So I would say to you that competition is going to come on Coinbase with those type of, but again, everyone else is playing catch up. Everyone else is playing catch up. So now the other question comes at, is everyone's playing catch up and we move forward into the future, it's going to be Coinbase's job to stay ahead in terms of technology, in terms of product and services and technology. But they have, right now, they are the place to be. If you're trading, I know some of you guys here trading cryptos. Those of you trading cryptos, how many of you have a Coinbase wallet? How many of you on Coinbase? And again, I don't know what the number is, but I would guesstimate my point that the majority of people that are trading cryptos are trading on Coinbase. So with that said, that's my Coinbase commercial. That's what I would look at. That's what I would do with it. I think the stock is tremendously overvalued. But again, right now in this marketplace, it appears to me that everyone is trading things that are overvalued. A lot of these stocks are overvalued. The second thing I'm going to say to you guys is, which I said earlier, is, again, Jerry Powell came out and said it. I'm going to repeat it. And he said he's basically looking for 6% growth in 2021 in the economy, and then 3% or 2%, coming back to 2% in 2022. If the Fed chair is out there telling you that those are the numbers he's looking at, I'm going to believe him. All right. And he's going to do everything in his power to make sure that the economy moves in that direction. Overvalued, hella. Yeah. All right. Now, the other thing is, which I start out, just a quick reminder, we are in earnings season. We are in earnings season. Again, it's one of the 4 major corporate events that comes out every year. It's a catalyst that will either drive a stock price up or drive a stock price down. I highly recommend that you guys start paying attention to what's going on with the earnings. One of the things that and I'm going to give you guys, I'm going to leave off Coinbase now. I'm going to give you my earnings strategy real quick. And my earnings strategy is this. First and foremost, one, look and see what companies in the industry have already reported. So for argument's sake, I know that you have a couple of bank stocks that are coming. I know in the financials, Goldman Sachs always reports early in the quarter. So when Goldman Sachs comes out, look at their numbers and look at and listen to what they say. If Goldman Sachs comes out and says we had great numbers and they tell you why the numbers were great, the next thing you got to ask yourself is that going to affect all of the financial firms, or is it just Goldman Sachs? Let me say it again. The companies that report early in your industries that you like or companies that you follow, when they report their numbers, they're going to tell you what their numbers are, good or bad. They're going to tell you what their forecast is. They're also going to talk about what drove the numbers, whether they're good or bad. The question you got to ask yourself is that industry or company unique? If it's industry, yeah, there you go. Goldman reported this morning. Again, I've been busy with this crypto, so I didn't even look at Goldman. So I'm not sure what the numbers are. But again, thank you for that. You want to look and see, when you look at Goldman's numbers, what drove the numbers either up or down. Then you ask yourself the question, were the numbers what drove Goldman? Was that industry-wide or is that just unique to Goldman? Now, if it's industry-wide, then I'm going to start looking at other stocks, other companies that are Goldman's competitors that I can maybe trade off their earnings. If it's unique to Goldman, then I'm not going to do that. The other thing that I want to suggest to you guys is start tracking your stocks a week before earnings come out. You're going to track them based upon price and volume. If you see the price start to move up and the volume start to move up, what you're seeing is that the marketplace thinks that they're going to beat the number. Now, last quarter, and I'm not sure about this quarter, but last quarter, there was not much what we call follow through. So in other words, a company would report a good number and either it would go up a little bit in aftermarket trading, maybe in aftermarket trading go up a little bit. But the bottom line is it didn't hold those gains in trading and it basically pulled back down. There was not much follow through. Now in the past, hey, what's going on, Gabe? Thanks for joining. In the past, historically, when a company beat the numbers and they reported really great numbers, the institutions would come out, raise their number, put a buy on it, and you'd see the stock maybe have a slight pullback and then keep running. We're not seeing that. So my suggestion is, when your company that you're following does beat the number and beat it really well, when I mean beat it, not beating the number by 1 or 2%, but I mean by 25, 30, 50% or more, when they really beat the number and it's a stock that you want to own that you like, my suggestion is to wait after the number is reported, maybe give it a day or two, see if it pulls back, and then buy it. Because the other thing that you got to understand too is when the number comes out, they're going to raise if the number comes out and it's really good, they're going to raise the estimate, they're going to raise the price target. The stock's not going to get to that price target in 2 days. So when you wait for the number, buy it, and then you'll see it over the next 2 or 3 months trade up to that price target. All right. The reason why I'm doing it that way is if you buy the stock ahead of the earnings report is when you're going to take on the most risk. And the reason why I say that is if they miss the number, that stock's going to get really hit. And the reason why it's going to get hit, 2 reasons. 1, they missed the number, which means that they're not meeting the forecast that Wall Street had for them. And 2, if they missed the number, it also tells us that that fast money that jumped in there to buy the stock for earnings, they're coming right out looking for another trade. All right, that's going to increase volatility. All right, earnings season. This is the time to make money. So there's a lot of things going on that can put some money in your pocket. Earnings season is one of them. And as you guys know, the market's been doing really well. Was it S&P, Dow all-time highs? NASDAQ is actually trying to fill in. Again, we talked about that spread trade, but NASDAQ's trying to follow and fill in. And again, NASDAQ is basically a technology market, and the tech stocks have basically seen profit taking. All right, let's see. I'm getting requests to look at CCIV. Again, let me switch to bear with me a second. So whenever I look at it, guys, let me say a couple things real quick. As I start to look at companies and look at charts, you guys know I always start out with a weekly chart. And the reason why I start out with a weekly chart, it takes out the volatility, makes it much easier to read. And so I'm looking at Church Capital. Why do I know this? Why do I know Church Capital? What happened with this? I was tracking this for some reason. My memory's not the best. It's not what it used to be. I was tracking Church Capital. And why was I tracking Church Capital? Yeah, look at that there. So there's the breakout. All right. So it looks like, well, let me switch it to a daily chart because there's a lot going on here. So let me see what's going on here. Let me switch it to a daily chart and look at more of it. That's what I thought. All right. So I'm not sure what started this thing running when it ran from $10 a share. Most likely, I believe this was a SPAC. Sounds like it was SPAC. Ham, I'll get to your FDR, I promise. Yeah, it was SPAC. So that's why I thought so. So the stock took off based upon the merger, what they acquired. Then you got that gap where it basically gapped down back in February, and it's basically been trading sideways. So here's my comment to you. You're looking at major support right here, 21. All right, so you're sitting the major support right now at $21 a share. It's hit this twice. You need it to hold 21. If it doesn't hold 21, I would say the next stop is probably somewhere around $17 a share. It can even pull back to $10. So you got major support at 21, and then you have some resistance. It looks like your resistance is around $30 a share. So the one thing I'm going to tell you guys about a lot of these SPACs is that special pack, acquisition corp, special purpose acquisition corp, is that the real growth is going to be in them is what companies they can put in there and at what price. So they're more event driven than they are actual performance driven. So again, who they actually can help bring to the marketplace and at what price. There's been some successful ones. DraftKings comes to mind. There's been some successful ones, but the real key is going to be who they can put in the portfolio and how they perform, who they can put in there, what they're paying for it. So, but right now, just on the technical basis, you're looking at major support right here where it's at, $21 a share. You're right at support. Now, the one benefit you have is volume's been drying up. So when you see volume drying up and you're at support, it means it should hold. But when that volume kicks into either side, either up to the downside, is when you're going to see. So, if you're buying this, if you're long or buying this, if it breaks this 21, get short or get out. And I see a lot of resistance. So like I said, $30 is the resistance level. The other one I had was Ham's favorite, FVRR. Ooh, Ham, volatility's kicked in. I'm going to a weekly on this. Bear with me a second. Going to a weekly. And as I look at the weekly, yeah, look at here. Come on, move up. Yeah. So I say it again. You got some support around 209 to 200 in that range. Just looking at the weekly chart. All right, let me switch to a daily. All right, let's see. Yeah, so again, you're looking at, you got major support at $200 a share. Major support. You have near-term support right here around 212, 215. If it can break through the resistance at, you've got resistance at 247, 248, 247. So I would say right now it's going sideways. I know earnings come out when? Earnings come out on May 7th, so you got another month. Volume's been drying up, which means that the selling pressure should be coming off of it because volume's drying up. But it's trading sideways. Yeah. All right. So that's that. Anything else? Tesla's competitor, yeah. Everyone's Tesla's competitor now. Everyone is Tesla's competitor. That's what I was saying about Coinbase. Everyone, when you have good profit margins and when you're making the type of money that these companies are making and the growth in their revenue, you're going to attract competition. It's just that simple. The automobile industry doesn't change as quickly because it takes them a while to they have to actually design the car. They have to design the car. After they design the car, then they have to actually design the factories to build it, and they have to build it. So it's not the fast turnaround, but competition's coming. It's here, it's coming, and it's showing up in the industries. HQ Global Education. All right. Gabe, I'm making this chart a little bigger. So again, not sure what's going on. This stock had a breakout, what you would call a major breakout, from pennies a share to $6 a share, 6 cents a share, I should say, pennies to 6 cents. And now it's back down to less than, what is this? 0.7 of a cent. So, Gabe, the first thing I'm going to say to you is I don't trade penny stocks. Wouldn't trade it, wouldn't touch it. Easy to manipulate. And looking at this company right now, looking at this chart, forget about the price, look at this chart. It's right at major support. There's major support right here at this level. If it doesn't hold this level of support, it easily could trade back down to where it was. If it does break higher, it's kind of funny. I'm never saying this. If it does break high, you got resistance at 1 penny, 1.3. You got resistance at 1.5. So I'm not sure if that's the stock you're looking for. HQGE, yeah, that's it. Not my kind of stock. The other thing too about it too, guys, is what you guys know typically for me is I'm buying stocks at or near their all-time high. So for this stock, there's so much resistance between here and going back to where it was that I would not be a big chaser of it. Let's see what else I have. Speaking of overvalued stocks, TIRX dropped 80% on no news. Does that sound like a pump and dump? Don't know the company, so I'm going to pull it up. TIRX. Don't know this company, but it looks like a couple things. This is ADR, right? Hold on a second. I'm going to find out for sure. This is an ADR. I'm almost positive. Not sure what country it's based out of. Now, ADR is American Depository Receipt, which means that this stock itself is probably trading on an exchange. No problem, Gabe. This stock's probably trading on some exchange. I'm going to say either in China or Japan. I'm not sure. But you can see that it's not a pump and dump. What's going on here is an ADR. And I guess the thing I would say is I have no idea what's happening in their home country. For those who don't understand, an ADR, you buy it on the New York Stock Exchange. You buy it here in the States in American dollars. No problem, Gino. I'll give you a call later on, buddy. ADRs are purchased in American dollars in our country, but the underlying stock of the ADR, in this case the TIRX, is still trading on its home country. So the stock here in the US is not going to react to our market. The stock here is going to react to what's going on in their home country. So I'm not sure what's going on, but yeah, this was trading well. Had a nice little pattern, had some resistance here at $97. And then you can see right there on April 12th, 2 days ago, it dumped off. And it dumped off on tremendous volume. Let me see if I can get that volume for you. So it dumped off on volume of, average daily volume was 2.5 million. The day it dumped, it traded 24 million shares. The next day it was down, it traded another 20 million shares. So what you're looking at is, I wouldn't say it's a pump and dump because I'm not sure what pumped it up. This chart looked really well. The thing I would say is this is one of the challenges you have to be careful with ADRs. Because again, the stock here you're buying and you're trading is all based upon the home country stock and what's going on there. So I would say if you're trading this TIRX, you need to really track what's going on in that country in terms of that stock. But right now, I would say you're right at support. You're right at major support, which is at $11 range. It hit it back in February, and you're back right there again. So you want to see it hold this $11. If it doesn't hold this $11, it's going down. Let's see what else. Yeah, so I was about to say, some of these companies are taking out their IPO, their old highs. RBLX, Roblex, took out theirs. But this is the thing that really got me kind of shaky or high. It took it out, but then you watch what it did today, and there's no follow through. And that's what's been the story for the last couple of weeks here in these tech stocks, that they're taking out their old. They might set a new high, but there's no follow through the next day. The other thing I wanted to bring up is, and I really wanted to get short this thing, and I never did, is Bumblebee. Bumble, I'm sorry, not Bumblebee, Bumble. Milligan Wisdom. I couldn't understand for the life of me why this stock was trading so high. And the reason being is, there's nothing unique about this company. There's competition all over the place. They have no good trade. They have no, what's the word I want to say? There's no moat around Bumblebee. Bumble. What's the moat? What's the barrier of entry? All right. So I just can't see the business model itself, and I can't see what's going to make that business model grow. So in that case, I thought it was, and again, you can see the stock is basically keeps hitting these all-time, it keeps setting new lows. And so I would just be careful of Bumble. Now, what is this stock you're giving me here? VYGR? See if I can read this. What's up, Paul Davis? VRGR, is that Voyager Group LT? Is that what you want me to pull up? Canada? Yeah, that's it. Canadian stock. Nice little chart. So, Ham has done something which I highly recommend you guys do. And that is, you want to increase your universe of investors that you speak to. The reason, and people that are like-minded. The reason why I say that is you can't follow and track every one of these stocks out there. You can't do it. So what you need to do is you need to find people that are like-minded like you, that think like you do, and they can say to you, hey, by the way, have you looked at VYGR? Have you taken a look at that, Mike? This is how you find stocks that you might have missed. So one of the things I'm going to say to you guys is, when you get off this call with me, if meet people, chat with people, find people that are like-minded and start sharing ideas. Just because Ham gave me VYGR, Voyager, does not mean I'm going to buy it, but it's something I need to look at because, as he said, Professor, he said they compete with Coinbase. So now I'm looking, I'm saying, okay, let's take a look at this stock. So this is how you start to do things. This is how you increase your universe. This is how you increase the number of stocks that you follow. Again, you cannot follow every stock all the time. You just can't. All right. But when you build up your group, your core, your team, as you build up your team, you'll be able to actually trade better and you'll make more money because your team will help you find things. Just like when you see something, you say, hey, did you see this? Did you see that? What do you think? So that's my recommendation. So I thank Ham for doing that. Ham, his nickname is Ham. I call him Ham. Ham, I thank you for that. I'm looking at this Voyager. It's got a pretty nice chart. And I can see where, I guess you can see that where the volume started picking up back in December of last year. Volume picked up, stock started moving. And again, I guess it's because the marketplace is realizing here's a play on how to trade, a platform to trade cryptocurrency, excuse me. The one challenge for me though is it's a Canadian stock, which means you're buying a stock on the Canadian exchange. I typically like to stay in the US or ADRs, but again, that doesn't mean that you can't trade this and can't make money. I have traded some Canadian stocks in the past and made money. One was an oil stock. I can't remember the name of it. Sun Energy, I think was the name. They actually pulled. They had the technology to pull oil out of sand. So they were the first ones that actually had that technology. So that was one. Let's see. Yeah, volume grew. I mean, I'm looking at the chart right now. So average daily volume. In fact, let me pull up this. I can tell you. Average daily volume back in October 2020 was about 58 million shares. And right now we're trickling that average to the last 20 days. Average moving volume now is 953. Oh, that wasn't million, that was thousands, I'm sorry. So back in 2020, that was 88,000 shares. And now on average, the stock is trading looks like about 800,000, 900,000 shares is the moving average. So your volume has actually increased tremendously. Let's see, they grew from 3.6 million to 20 million in February. So yeah, volume's up, revenue's probably up too a little bit. So there's another play. Competition's there, another play, another way to play that market. All right, let's see what else. NASDAQ uplisted later this year, early next year, material catalyst. You guys, just so you know, make sure you understand this. Our Ham, the Arminator, is a analyst. So he actually writes research reports. So when he's actually telling you about a stock or he's looking at it, he's done his homework on it. Just so you know. I'm not telling you to buy it. Ham would tell you, I'm just an analyst. You can read my report, but I'm not telling you to buy it. But he does write reports, and this is his job. So, and we got a couple of guys on here that I don't know if you guys realize that you got a couple of guys who come on here that are actually analysts or institutional traders. This is what they do for a living. So anytime you can get some advice from them, a conversation with them would also be beneficial. Microsoft, Softy, MSFT. Haven't looked at Softy in a while. Again, I'm taking it to a weekly chart, taking out of the daily chart. Daily chart shows too much volatility. I want to see what's going on. I want to smooth this out a little bit. I don't know what to tell you other than, if you look at a weekly chart, which takes the volatility, stocks at an all-time high again. I have a comment, I call it stair steps to heaven. You can see support, resistance, support, resistance, support, resistance. This is just a stair steps to heaven. So looking at this chart, beautiful chart. I'm not sure where your entry point would be. Again, if you're doing technical analysis, a lot of times you're trying to figure out where to get in. I'm not sure where your entry point would be. I'm looking at this. The only thing I would say is, and this is not negative, I'm not sure where I would get in at. And the reason being, it's moving up. Now you have earnings coming up at the end of the month, on the 27th, it looks like. So it is trading sideways a little bit in a little range, although it has traded higher. It took out that 245 number, which was resistance. The only thing I would say is 245, 10% of 245 would be what, 245, 25 bucks, 245. Yeah, I guess you could still buy it here. You can still buy it here. And I'm looking, you probably got major support at 227. There's an old trading range between 227 and 238. All right, so if it breaks below that 244 in that 238 range, you could see it trade as low as 225, 226. I don't think you're going to see that. I think the stock will trade well ahead of earnings. I'm just looking at the chart now, earnings. Yeah. I'm laughing at myself. I have call options expiring Friday, and it's bad, LOL. Yeah, time is your enemy, right? Time is always your enemy. But the stock looks really good. I mean, you might get a push. You might get a push by the end of the week. You might. I guess the key is what's your strike price. So I guess it's the fact that you're saying it looks really bad must mean that you brought some out of the money. You must still be out of the money, or either you paid a large premium for it. Yeah. By the way, guys, if you're trading options, not to say that you did anything wrong, anytime you can get time, time is typically when trading options, time is your enemy. Anytime you can buy or get more time, you want to buy and get more time. It's only going to put more money in your pocket. It's going to cost you more, but time is to your advantage. And most times when trading options, in my experience, for me, has been that I haven't been wrong. I ran out of time. Now, I do understand too, which I want you guys to understand. If you buy more time, it's going to cost you more, which means it's going to raise your break-even price. All right, but anytime you can buy more time, it's going to work to your advantage. Yeah, you got the 265s, you're out of the money. Yeah, you got the 265s, you're out of the money. I'm not even sure how much you paid for it, but you got to get to 265. At 265 is your options will actually be at the money. So yeah, you need a major move between now and then. And the challenge you have is earnings are coming out end of the month. Yeah, time is against you. So, like I said, the chart looks really well. The chart looks really good. I just don't know if you're gonna get that move you're looking for. You bring up a point. I'm just checking my time. You bring up a point that always pops to my head, and that is when you're doing short-term trading. And I said this earlier, and I'm gonna say it again. When you're doing short-term trading and you're trading anything, there's got to be a catalyst. And the catalyst is something that's going to make the stock go higher. So the thing I would say to you is, what were you looking for that was going to drive the stock price higher between now and this Friday? That's a catalyst. Now, you heard me just say earnings. That's a catalyst. All right, earnings reports a catalyst. That can move the stock. News can move a stock. Mergers, acquisition can move a stock, as you guys know. A really bullish market can move a stock. A really bearish market. But they're catalysts. And I guess the thing I'm saying to you is, is the next time you're looking at this and you're trading an option on it, there should be some type of something that you see or something that's going to happen that's going to drive value. All right, that's going to move the stock price up or down. And that's one of the reasons why I always tell you guys, you got to start studying your company, studying your stocks to see what makes them move, what makes them tick. All right. The one thing I can say about so in my research on the cryptocurrencies, I'm looking for what makes the cryptocurrency move up and down. I know it's supply and demand. You want to get down to economics 101, the cryptocurrencies are basically supply and demand. All right. Supply and demand. That's what you're looking at. So the question is, what's making these go up? And from what I'm seeing, I'm not saying I'm wrong, it reminds me of the biotechs is that they're moving off of news. They're moving off of this company's now adopted a cryptocurrency. This company's now doing it. Elon Musk is talking about Dogecoin. Dallas Mavericks owner. Mark Cuban's talking about this. This one's talking about that. They just signed a contract for this. China's going to come up with their own cryptocurrency. Those kind of news events are what's moving the cryptocurrencies right now. And the challenge that you have is you don't know when the news is going to be announced. You don't know when they're going to make those kind of statements. All right. So, but those are catalysts. All right. That's one reason why I don't trade biotechs, because they typically move off of news announcements. And you don't know when that news is coming. You could end up being in a biotech or waiting for news to come out on that drug for several weeks, several months. And also the news does come out and it could be a non-event. That's one of the reasons why I never liked biotechs. I didn't like sitting around waiting for news. But you get what I'm saying. So I guess the thing I'm saying to you on Microsoft is I'm not sure what's going to drive this up by Friday. I could see it being driven up by the end of the month because earnings are coming out and investors trying to get ahead of the number. That could be a catalyst that drives it. So again, guys, I'm going to say this, and I'm going to probably end up wrapping up just because I'm getting closer. You know, I like to save all these and post them. I'm going to say this to you. If you're trading options, the better stock picker you can become, the better your option trading is going to be. Remember that the underlying asset of an option is the stock, and the option is going to react to what the stock does. So the stock doesn't move off the option moves off the stock. So you want to buy, when you're buying trading options that you think are going to go higher, it's because you actually are looking at the stock and you think the stock's going higher. So the better you can become at your stock picking, the better you can become at forecasting where it's moving and what it's going to do, the better off you're going to be with your option trading. The other thing that you can do too is, for argument's sake, like I'll give you a prime example. Let's say Microsoft is due to report earnings, which it is on the 27th. And you could straddle it. For those who don't know what I'm talking about, you could straddle it. You could actually take a hedge position to either the bullish side or bearish side. There's a number of things you can do. You could actually ride a straddle or collar. You could buy a straddle or collar. If you're riding a straddle or collar, it means you think the stock's just going to trade sideways. If you're buying a straddle or collar, it means you think that the volatility of the stock's going to either go down sharply or up sharply. So the other thing I'm going to say to you guys is, once you understand the stock and how it works, the next thing is what option strategy will actually allow you to profit off of what you see. All right. So again, not going, long story short version, your ability to make money in the options would be depending on how well you can actually pick stocks and understand how the stocks are going to either go up or go down, and your ability to forecast the underlying asset. Now, with that said, it just brings up a couple of points. I know I've been saying this. And trust me, I'm working on it diligently. I do have some online classes that are being created right now. All right, and one of them is the options and options market. Now, not option strategy, option markets. Trust me, I'm working on it. My wife will tell you I'm in my office. When I'm not teaching, I'm in my office right now, down here actually creating these PowerPoints and these presentations for these different securities. So I am working on it. I know you hear me talk about it. Trust me, it's not like I'm saying it and not doing it. It's time consuming, because the other thing that's time consuming about it is I want to make sure the information I give you is accurate and good and can help you grow in terms of becoming a better investor. Part of becoming a better investor is to understand the rules and how these markets work. So when you learn the rules, and I call it the rules, but you understand the underlying fundamentals of the market and how they trade in these assets, and then you start forming strategies. I'm gonna say, if you listen and follow, I hair off my beard, sorry. If you listen and follow and I guide you, my students that have been in class with me know what I'm about to say. I guarantee you'll start to make money. And a number of my former students, college students, are on here now, and they've heard me say that to them, and I'm pretty comfortable in saying that. They would also tell you that I was accurate, and I actually did help them learn how to make money and how to become more profitable. So that's what we're trying to do with these classes. We're putting them together, and so I can bring that to you. All right, I'm about to wrap this up because I want to keep the hour. I want to stay within the 60 minutes so I can actually post this up. I'm going to post this on IGTV, and I'm also going to post this on my YouTube channel. And wrapping up just one more time, these are my opinions, my thoughts. If you're going to trade, my lawyer, the fine print, my lawyer. If you're going to trade, do not trade off my recommendations. Please speak to your advisor, who you talk to about your trades. These are just my opinions and thoughts. And basically what I'm saying is if you go out there and do something stupid, don't blame me for it. All right, guys, I appreciate you and I thank you for stopping by. You know what I'm going to do with Coinbase. If and when I do buy it, not if, but when I do buy it, if I have the time, I'll send out a quick little post on IG and let you know that what I did and when I did it. Appreciate you. Have a great time. Thanks, Richard. Talk to you guys later. Bye-bye.